In this video, I'll be going over my best and worst trades in 2019. We'll mostly be analysing the charts, so let's get started. I need to actually define what makes a trade the best and the worst. So it's going to be a mix between percentage outcome, the quality of the analysis, the forecast, and the confluences of the trade. Anyways, we'll learn as we go along, and let's get into the charts. So the first trade I want to show you is Euro Dollar. This was back in June 6, 2019. So we've got the daily chart up on here, and what you guys can see is a descending channel. We have this descending nature, you can't lie, this is corrective, this is descending, it's not impulsive. But if we look at more current price action, the last 3 days it's been pushing to the upside. Now, how I used to trade before was with trend lines. So we can say that we have this descending channel here, and if we wanted to go to more current price action, if we just jump onto the 4 hour, we can say that there's a descending within that descending. And I believe when I was forecasting it, this is how I had it out. And we can clearly see that here we've got the descending channel. And what I've written in my ASR is that we've got this descending pattern, and then we've broken to the upside. And naturally, what I was been looking for is a tight flag as a continuation to the upside. So let's see what happens. And if we jump into the 1 hour, we can start to see that we're getting sort of messier price action. If we jump on the 4 hour, you see that we've got these wicks, and wicks don't really give me confidence to take a trade just yet. So we dig into the 1 hour and see what kind of price action is forming here. Again, what I was looking at is we have impulse looking for a setup to take to the upside. But what happens after the impulse is that price starts to become a lot messier. It was at this point where I started to put trend lines in and call it an ascending channel. So what happens is I would zoom in, and for this bit of price action, I started to see an ascending channel. It looked corrective. So what happened is we had this descending, push up, and then had almost this mini ascending. And how I was playing that is I wanted to see if we could get a setup to the downside. So that was my thought process at the time. So if I just play price forward, what I was looking for was sort of two bottoms, clear bottoms, that would allow me to have my lower trend line in for the tight flag. So it was around the morning of the London session, so it was around 9. I remember seeing these two sort of bottoms, and what I did was I placed my sort of reduced risk entry, which is the breakout of this lower trend line. I had about a 20 pip stop loss, and what happens is price literally tags me in and out within the same hour. So that was a 1% loss. There's a few lessons here and why I'm classing this as sort of a poor trade. You know, again, these are just titles, worst trade, etc, etc. But there's a lot of lessons here, because how I would trade this now, I wouldn't even take this entry. I think the first thing is to ask ourselves like where we are within the structure, where are we within the market. And the key thing is where we are at the start of this. We are at the start of this ascending channel. Let me just clear up my charts. This area is such a poor area to be taking trades. So if I was just to like draw more of a schematic, I'd say anything at the start of this point, which, you know, I used to call this the 90% rule, but you guys can call this a support zone. But whenever we start to get some sort of correction here, it's more likely that we're going to push to the upside, and this is just catching people on the wrong side of the market. Same thing here. So the first rule, or the first sort of lesson, is the fact that the trade was at the start of this ascending channel. And what I'd like to see more of is a push, you know, past this 90% rule, and then we get the tight flag for an entry, or we continue and get some sort of retest and continue. Just another quick lesson is, if we do have a larger ascending channel, then I'm happy to take it within sort of this structure. But this is assuming that, you know, we have a lot of movement to at least this, you know, to hitting this area. So that's sort of lesson number one, poor area. Like looking back in hindsight with the knowledge that I have now and how I'm trading, this is sort of why I'm not a big fan of having trend lines on my charts, and which is why I trade naked charts, is because the moment you start putting a trend line here, you automatically, like your subconscious starts to see this as a breakout and will start to have confirmation bias to take it short. Now, you either have to be very good at trading, you know, market structure or with trend lines patterns to know that. But I've seen a lot of like novice traders who trade patterns and market structure to then start just looking for sell, and they start to deviate from being at a neutral standpoint. So the moment you start, you know, putting a trend line here, you start seeing this as a breakout, and then you might get confused on this as impulsive, and then you forget where we are in the structure, and then you forget that there's pivot areas such as, let me see, this inside bar, and you know, we'll get to this point. But that's just a little detour as to why I trade price action now, because, you know, we don't want to have this confirmation bias where price can be this going here and there. Rather, we look at price for what it is, and this is how I trade personally. We look at price for what it is, and, you know, I saw this as impulsive. How I trade this now is that the fact that we've had these little counter trend inside bars tells me that there's actually momentum that is struggling to push lower. And it's always, you know, it's always evident as we return back to this 90% rule. Price is struggling to push lower, so that shouldn't have given me the confidence to take this as a short. I've been saying this in my previous videos that I've been really looking at what is impulsive. This doesn't, to me, isn't impulsive because of these clear candles here. And I think the most important thing here is, what are the higher time frames saying? And this is why I'm going back to higher time frames, because higher time frames are actually super important, and you know, I found them very, very valuable with how I trade and how I'm seeing the markets recently. We can't deny that this is a push up. It's a lot more risky to take the short unless we have, you know, clear downwards momentum. So on the 4 hour, we might, yeah, get the ascending, but until we actually clearly break this on a higher time frame standpoint, I shouldn't really be looking for a short. So that's another thing. So I was fighting against the higher time frames, trying to get that 1 hour short play at a poor area. And lastly, I'd say the third thing about this is, in my previous video with my Q&A, if you want to go watch that, I'll plug it up on the cards, top right. We have an inside bar level here. Again, inside bar candle didn't break the high or low of this previous candle. So we can put a level in this area. Again, I said how I trade inside bars are very kind of different, and this is just coming from my own personal experience and backtesting. As long as we have a momentum to the upside, I can identify these key area that price can come back down and then pop to the upside. Again, because we have this push up, and then I guess those who do trade patterns will call this a bull flag to the upside. It's like all these different strategies kind of can coincide into one thing. So in summary, the reason I took the short was basically off the 1 hour ascending channel, and I confused this to be impulsive. Now, reasons that I should have sat on my hands was that this isn't actually impulsive. Obviously, the higher time frame, impulsive, bullish momentum, and the area we were at, and the fact that we had this key level that we could simply tap and go. And obviously what happens is we tap and go. So that is pretty much the euro dollar trade. And again, a lot of lessons learned, and I feel like just calling it the worst trade in 2019 is not exactly what I mean, but there's a lot of lessons here, and I would definitely analyze this chart a lot different if I saw it now. So let's move on to the best trade of 2019. And again, this is just an amalgamation between sort of the percentage outcome and how clean the analysis, the forecast, and how clean the market was at the time. I think there's a good lesson here, especially as we compare it to the previous trade. So we have Aussie dollar, and we are on the 1 hour time frame. This was a buy along setup that I took on, I want to say the 17th of October. It was Asian session. So we can clearly see we have impulse correction, and you know, you can put the trend lines in if you want, if that helps you out. We kind of have a mirror image here. Let's look on the 4 hour. Let's see what's happening on the 4 hour. We are basically sort of had this messy descending here, and we can clearly see we are now trending to the upside as we have this low, this high, this low, this high. We're basically trending. Now, going back onto the 1 hour, I just want to quickly show you the entry. If we look at the most recent piece of price action, which is this descending channel, we're seeing a tight flag. Now, the clean thing about this tight flag, which is different to the other one, is that it has got momentum behind it. It's not wicky as well. And how I traded this was at a breakout of this top. Let's put this, and say it was also 20 pips stop loss. Once we started to get these two highs, obviously I'd rein in this trend line. Then we see price again triggers me in, and yeah, pretty much the entry is very bog standard impulse continuation trade, breakout of this upper trend line. Then we obviously have, you know, this double bottom here. We have a 1-2 touch, we have wicks, rejection wicks. There's a lot of confluences that this trade could play to the upside, and the higher time frames are coinciding with our trade. There's actually multiple ways someone could have traded this, and what I love about it is that it is basically, the pattern recognition of it is very clean. We have the clear impulse, correction, impulse, and then we go again. This was sort of a no-brainer trade, and it happens time and time again, especially with Aussie dollar, Kiwi dollar. They trend very well from what I've learned from my personal experience. And I think, yeah, it's just beautiful price action where market structure, patterns, and, you know, you can even say zones, that they, you know, coincide, and you can have pretty much like a level in this area where price comes back to, grabbing liquidity and pushing to the upside. And that's something that I don't actually trade, but I'm aware of it, and I look at it as confluence rather than an entry point. How I trade this now is naked price action, because it's clear that we've had this descending. You can see messier price action, we're breaking lows, retracing, and then we have momentum to the upside. So naturally that's when I would look for the trade, and we're looking at the candlestick formations as well. So for me, this would be a very clean trade. Let's just see what happens afterwards. This was actually a scale in that I took with, again, a 20 pip stop loss. And this ended up banking me, I want to say 4.6 for this trade, and then 4.6 for this trade, so it was around here, 4.6, and 3.25 for the second trade. I feel like I just overed it, 4.25, so it was around here. So this is how I basically traded it. You can see price now becomes corrective. Like when you don't have patterns or trend lines, you can clearly see what price action is telling you. You're not kind of predefining what price action is. So again, you can keep putting, you know, trend lines and then having to like adjust it every single time. That's just personal preference as I've evolved as a trader. And yeah, price pushes up, and then I believe it does push down at some point, and I get taken out. So that is pretty much how I managed it. I'm guessing I managed it below this low here, and taking a message from the market that we could reverse. So that is pretty much, I would call, you know, the best trade of 2019, just with the whole clean price action and a lot of different you know, so-called strategies just coinciding to create this long position. And the market moved very clean with, again, just impulse correction, impulse correction. We're trending, we're creating higher highs, higher lows, higher highs, higher lows. If we put up a line chart, you can again see that we're trending, and it's just very clean. So it's something that I wanted to share. It's something that's completely different to the euro dollar trade that I showed. And yeah, so guys, that is pretty much it. Again, there's always more than one way to trade, but you got to do what works for you and how you best see the markets, what you've sort of discovered with your in-market experience, with your back testing, and kind of tweak, take things out, take things in, whatever suits you as a trader. And again, I just hope you enjoyed sort of the chart analysis and the thought process behind taking the trades back then, and then how I would analyze it now with how I've sort of been growing and learning as a trader. And if you guys want to watch a video where I share my most profitable week in 2019, I think I took like a dollar Swiss trade, and that was my biggest trade of the year. Definitely go watch that. I'm going to put it up on the screen, and I hope you guys have a great week, and I'll see you guys in the next video. Thank you for watching.